Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me is Sheshat Baryu. And for the next 1 hour, we'll take you through the top buzzes in the trading session today on the back of research or on the back of technicals. But first up, let's take stock of how the market is shaping up. A good recovery coming in, Shesha. In fact, we have recovered from the lows, at least 85 odd points on the Nifty and a good 130 points on Nifty bank recovery. In fact, even the sectors are recovering. If you look at it, barring Nifty Media, all the other sectors are now in the green.
Indeed, barring Nifty Media, all other sectors continue to trade with gains. We have IT index, which is bucking the trend. In fact, Nifty IT index is the biggest sectoral gainer in trade today. This index is up nearly 2.5% as we speak. We have the likes of Infosys. This one is up 3.5%. TCS, HCL Tech, Emphasis, Wipro. All of these IT majors sitting with gains in excess of 2% in trade today. We also have real estate stocks which are firing in trade. We have Nifty Realty Index which is gaining in excess of 1%. We have the likes of Sobha up 1.5% as we speak. Godrej Properties, DLF, Prestige Estates, Phoenix Mills, all of them gaining in trade today. But this is a show where we discuss all the stocks that are buzzing in trade today, and to do exactly that on the technical side, we are now joined by Rajesh Palviya, Head Technical and Derivative Research at Axis Securities. And from the research desk, we also have Rabinder joining us. Ankita, let's get started.
Well, yes, absolutely. Hi, good afternoon to all of you, and thank you so much for joining us. Let's get started with all the buzzes in trade then. Adani group of stocks is in focus, Adani Enterprise and Adani Ports. Now, Adani Ports is in focus in the back of fact that they have announced that they are building a logistic park in Kochi spanning 70 acres with an investment of over 600 crore rupees. So the facility will have a 1.3 million square feet of integrated logistic infrastructure with smart and sustainable features. Developed under the Invest in Kerala initiative, this landmark project marks a pivotal step in transforming Kerala into a logistics and industrial powerhouse. Adani Ports said that in a press release, and on the back of this, Adani Ports is in focus. It has turned absolutely flat right now, but nonetheless has recovered from the day's lowest point, but absolutely flat as we speak.
But let's also put the spotlight on UPL then. Rajesh, the stock is up nearly 2% today, 730. Tell us on the charts, where do you see the stock headed?
So UPL is in moving in upsloping channel on weekly chart, and the way daily, weekly time frame charts are indicating that we may see further more continuity of uptrend. Derivative data is also on the promising side. Long built up is there. This is a second consecutive week where stock is making higher high-low formation. So trend is on the bullish side. We believe that this stock has potential to continue upward momentum towards 760 to 770 in the continuation of this up move. So I think one can buy and accumulate this stock. On the downside, 710 needs to keep as a stop loss.
Okay, so that's the word coming in on UPL. The stock is already up 2% today, but let's also put the spotlight on a whole host of tire companies which continue to remain in focus on the back of some commentary that has come in from tire companies. First up, we have important commentary that has come in from JK Tires. Sunil Singhania, or rather Anshuman Singhania, he is the managing director of JK Tires, where the management has said that the industry is likely to achieve 7 to 8% growth. As far as domestic tire industry is concerned, this is on the back of strong domestic replacement demand despite muted original equipment offtake. So very strong commentary that has come in from the management of JK Tire. Let's also talk about Apollo Tire. Apollo Tire's CFO Gaurav Kumar told analysts that the company expects demand momentum to improve in the second half of this fiscal year with rebound in infrastructure and mining segments post-monsoon, and that is likely to aid demand for the tire industry going forward. He also says that they expect raw material costs to slightly decline in the second quarter vis-a-vis the first quarter. So some important commentary and a solid commentary that came in from the management of both JK Tire as well as Apollo Tire, both these stocks in focus on the back of that.
All right, moving on from the tire stocks to Godrej Properties. Ravinder, tell us why is Godrej Properties in focus?
Plus, Godrej Property is in focus, where company has sold inventory worth of rupees 1,000 crore in its project Godrej Regal Pavilion, which is located in Rajendra Nagar, Hyderabad, and company has launched in August 2025, and this is company's second successful launch in Hyderabad this year, with both projects surpassing of rupees 1,000 crore sales milestone at a launch, and a testament to the city's strong demand and customer confidence. And the Godrej Regal Pavilion is one of the company's largest residential development estimate in South India with a developable potential of 4.14 million square feet and an estimated revenue potential of rupees approx 3,600 crore, and the 3,600 crore, which is significantly enhancing the company's presence in the southern region of Hyderabad. So back of this news flow, Godrej Property is in focus and the stock is holding a gain of more than 1.5%.
Okay, so the stock is up nearly 1.5%. That's Godrej Properties for you. But let's also put the spotlight on the recent upgrade that came in. Remember, last week we had S&P and now we have Fitch, where credit rating firm Fitch has today reaffirmed its long-term foreign currency issuer default rating for India at BBB minus, citing strong economic growth and resilient external finances. Anurag Joshi, my colleague, is now joining us with exactly what Fitch had to say on this reaffirmation of rating.
Fitch Ratings has affirmed India's sovereign credit ratings at BBB minus with a stable outlook. Fitch, in a statement, has said that India's rating are supported by robust growth, solid external finances, and a strengthening record on delivering growth should drive a steady improvement in the structural metrics, including notably the GDP per capita. The increase is likelihood of the debt of the country trending moderately downwards in the medium term, and the fiscal metrics are a key weakness according to Fitch, and that also includes high deficits and debt servicing compared to BBB peers, which Fitch rates. In terms of the economic growth outlook, Fitch has kept its forecast for FY26 India economic growth at 6.5%. That's unchanged from FY25. Domestic demand will remain solid. That is underpinned from public capex and private investment. Private investment is likely to remain moderate, and particularly given the US tariff risks. Fitch has also touched on US tariffs, and it says that US tariffs are a moderate downside risk but highly uncertain. In terms of the MPC and its rate outlooks, Fitch says that the low inflation CPI in India now, that gives space for one more 25 basis points rate cut in 2025, and falling food prices and RBI's policy actions are keeping the headline inflation constrained.
All right, so that's the news coming in on Fitch's India outlook. But let's move on then. Rajesh, coming to you. You've picked out Titan for us. Tell us, what do you see on the charts for Titan? If you look at the charts, in fact, Titan today is up in a way 1%. In the last 6 months also, it has done well. Do you see the positive momentum to continue for Titan?
Yeah, definitely, Ankita. If we analyze the overall structure, stock is in bullish trend across all time frame. In the near-term perspective, this is the fourth consecutive week where stock is making higher high-low formation, which is a sign of sustained buying action is taking place. If we analyze the short to medium-term structure, now stock is negotiating with its multiple supply zone on the monthly chart as well as on the weekly chart. So any breakout above 3700 can take this stock further higher towards 3850, even 3900 kind of zone. So overall structure is looking quite bullish. So we suggest here to buy and accumulate this stock for upside target of 3750 to 3800. On the downside, 3610 should be your stop loss for short-term investment.
All right, so bullish trend intact for Titan on the charts, but let's move on to the next counter that's doing well in trade, and that's Yes Bank. Now, Yes Bank's share, in fact, rallied 5% today after the Reserve Bank of India granted approval to Sumitomo Mitsui Banking Corporation, or SMBC, to acquire up to 24.9% stake in the private lenders, paid up share capital and voting rights. On the back of that, we did see a 5% uptick coming in on Yes Bank. It has cooled off from there, but nonetheless, it's still trading up 1.5%.
Okay, so that's Yes Bank for you, but let's also put the spotlight on Jindal Stainless. Rajesh, you've picked this counter for us. Tell us, what do charts indicate for the stainless steel major?
So Ashisha, if we analyze the overall structure for JSL, stock managed to give breakout of its previous swing high, and this stock is clearly in uptrend and outperforming to all its peer companies. Looking at the overall structure, we believe that the way stock managed to give breakout on weekly as well as on the monthly chart, there is a potential to continue furthermore upside in the near term as well as on the short term perspective. So we are projecting target towards 840 to 850 in the continuation of this up move. So one can buy and accumulate this counter with stop loss of 780.
Okay, Okay, so 780 is the stop loss for Jindal Stainless. That's the word coming in. But a whole host of counters are in focus on the back of nifty rejig announcement that came in over the weekend. This, remember, will be applicable from the 30th of September. Two stocks from nifty that are to be include Interglobe Aviation and Max Healthcare. Interglobe Aviation for you sitting with gains today. But on the flip side, IndusInd Bank and Hero MotoCorp, these are the two candidates which will probably be out of nifty with effect from the 30th of September. So on the back of this announcement that has come through, all of these stocks are in focus. Meanwhile, FTSE rejig is also likely to take place from the 22nd of September. And we have a whole host of companies from across the spectrum which are likely to be included in the All World Index. We have Autumn Investment, Cholamandalam Finance, Hexaware, Godfrey Phillips, MCX, JK Cement. These are the stocks which are likely to be included. So yes, a lot of index rejig happening and these stocks in focus on the back of that.
All right, nifty rejig, on the back of that, the stocks are in focus. But let's move on to another stock that's in focus on the back of a brokerage note that's come in. ITC Hotels, Ravinder, take us through what does the brokerage note say?
Well, yes, JM Financial has come out with a note and they have initiated a coverage on ITC Hotel with sell rating and target price rupees 215. They say that the company has delivered a 22% CAGR in EBITDA over FY23 to 25, which is driven by 15% CAGR in RevPAR during the same period. However, due to limited incremental inventory getting commissioned until FY26, JM Financial believes that the growth will be limited in the near term, and company has asset-light model pipeline to further expand its footprint to over 200 hotels and approx 20,000 keys by 2030, and they expect it to report a 11% and 13% CAGR in revenue and EBITDA over FY25 to 28. While robust cash generation can enable it accelerate growth by way of inorganic acquisition, they believe such outcome is adequately priced in at a current valuation of approx 30 times on FY27 earning. So back of this note, ITC Hotel is in focus. Though stock was down approx 2% in the early trading session, but now it has recovered but still trading at red.
All right, moving on then to the next counter that is in focus, and that is Cohance Life Sciences. Now, Jefferies has initiated a buy rating on the counter, and they've given a target price of 1,050 rupees. Now, the stock they feel is poised to capitalize on favorable conditions in the antibody drug conjugate industry, and according to a recent analysis that was done by Jefferies, now the brokerage has set a target price of, like I mentioned, 1,150. That is suggesting the potential 30% upside from Friday's closing price. And despite facing destocking pressures in the specialty chemicals division, where sales contribution fell from 22% in FY23 to 11% in FY25, Jefferies anticipates an improvement. Now, the specialty chemicals are likely to recover from the financial year 2026, while the pharma CDMO destocking should resolve within the next 1 or 2 quarters. That's what the report stated. Now, this recovery, coupled with Cohance's robust ADC business and expansion opportunities, is expected to drive the sustained high growth. The company's growth will be further supported by its strong ADC pipeline, integrated offerings, and diversification into the Indian market. With multiple growth levers, including new customers and modules addition, Cohance is well positioned to overcome the current challenges and achieve significant growth in the coming years. That's what the note from Jefferies says. On the back of that, right now, Cohance is up in a way 1.3% in trade.
That's Cohance Life Sciences for you, but the stock is buzzing on the back of that Jefferies report. But let's also put the spotlight on Eternal then. Rajesh, the stock is sitting with gains of nearly 0.5% as we speak. 321, 350 on the anvil, is it? What do technical indicators suggest for this counter?
So very strong technical structure for Eternal. Stock is almost trading near to its all-time high trajectory. On a weekly chart, there is a breakout of rounding bottom formation. So this breakout clearly indicates that the stock has potential to continue furthermore upside from the current level. So buy and accumulate would be a strategy. And looking at the chart structure, we believe the next target for the stock would be around 345 to 350. So Eternal is looking attractive for short-term buy. On the downside, 305 should be your stop loss.
All right, moving on from Eternal on the charts to Star Cement, Ravinder. That's the counter that you have picked out for us. Tell us, why is Star Cement in focus today?
Well, yes, Star Cement has been declared as a preferred bidder for mining lease of Perever limestone block, which is located in Jaisalmer, in e-auction conducted by the government of Rajasthan, and the block is situated in Jaisalmer with an over an area of 960 hectares with an estimated limestone resource of 271.38 million tons. So, back of this news, Star Cement is in focus, and the stock is holding a gain of more than 2%.
Okay, so that's Star Cement for you. The stock is up 2%. But let's also put the spotlight on Zydus Life Sciences then. Rajesh, what do technical indicators indicate for this counter?
So there is a fresh breakout on Zydus Life, and looking at the derivative data, there is a long built up, and after a brief consolidation of 5 week, now stock managed to give breakout. And looking at this breakout, we believe that 1060, 1070 would be the next target for the stock in the continuation of this up move. Looking at the breakout, we believe that the fresh buying interest has been there, and long addition is already there in the derivative data also. So I think one can buy and accumulate this counter. On the downside, 1005 should be your stop loss, and possible target is 1060 to 1070.
Alright, moving on from Zydus Life to DV's Lab from the Pharma Pack. Now, Jefferies has also come out with a note on DV's. They're setting a target price of 7,150 rupees versus an earlier 6,750. So there's an upgrade coming in, and from hold, they're maintaining a buy call. They feel that DV's has the best GLP-1 pipeline in India CRDMO and key candidate for the benefits from China Plus One strategy. They expect the custom synthesis growth to continue at 16% CAGR through FY28, while the new launches in the generics should lead growth recovery, driving 14% sales and 20% EBITDA CAGR over FY25-28 estimates. On the back of that, they're maintaining a buy call on Divi's Labs, and on the back of that, Divi's is up in a way more than 1.5% in trade.
Okay, so Divi's Laboratories up 1.5% on the back of that. But let's also put the spotlight on the defense sector, and the entire pack is in focus. But in particular, Masgao Dock. In fact, at one point in time, the stock was up as much as 4%. And at the moment also, it has given up some of those morning gains. But despite that, sitting with gains in excess of 2% as we speak. So India has cleared Indo-German submarine deal to the tune of 70,000 crores. And as per reports, Defence Ministry and Masgao Dock shipbuilders will soon begin talks with Germany to build 6 advanced submarines under this project. This, of course, is in preliminary stages as of now. Discussions will go on for the next few days. But basis this confirmation that has come in, the stock continues to trade with gains of nearly 2% as we speak.
Alright, moving on from Masgao Docks, up in a wave 2% in trade to the next counter, which is doing pretty well today. In fact, that's up almost 4.5% in today's trading session, and that's Hyundai Motor India. Tell us, Rajesh, on the charts you've picked out Hyundai for us, some fresh breakouts coming in. This counter has been outperforming. In fact, 35% gains is what we see in the last 6 months. A clear outperformer there. Do you see this momentum to continue?
So Geeta, clearly most of the auto stocks have done well post this GST rate rationalization announcement has been made by the Prime Minister. So I think looking at the overall scenario for automobile space, I think Hyundai is one of the stock where outperformance is clearly there. Stock is almost trading near to its near-term support area. After a brief correction, now again fresh buying action has been visible in this counter. So we believe that till stock is holding about 2420 level, trend is likely to exhibit on the bullish side. Possible upside towards 2550, even 2600 we could see in the near term perspective.
Okay, so that's the view coming in on Hyundai, 4% higher for that counter. But on that note, we need to slip into a very short break, but we'll discuss many more buzzers on the other side, so don't go anywhere.